I want to move on to Bob Morris. Bob, what you got?
Bit about CNQ, Canadian Natural Resources, US ticker symbol CNQ. As you know, this is my favorite energy name, the largest holding in my own energy personal portfolio. This stock's done extremely well since they reported earnings at the end of February. It's up 17% versus the XLE up 11%. So energy's outperformed the broader market. CNQ sharply outperformed energy. And but the stock is down about 6% after notching an all-time high last Thursday. And the important thing is the dividend yield on this stock right now is 4%. And as you know, I think that dividend is very safe, something they've raised every year, at least once, sometimes twice last year in the past 20 years. So I feel very good about the dividend. But as you also know, all these energy stocks are driven by the direction in oil prices. And we've seen WTI prices now over $86 a barrel, Brent over 90, largely driven by the geopolitical tensions that are occurring in the Middle East between Israel and Iran. At the same time, we've had very strong gasoline, diesel, jet fuel demand in the US, driven by the strong economy. So at this point, though, there is largely a sort of buy the rumor, sell the fact type of phenomena that occurs with oil prices, and that they built in this geopolitical premium ahead of what we saw this past weekend. The question now is, what does Israel do in response to Iran's attack? And is that significant enough to keep this geopolitical premium in here? Or do oil prices soften up a little bit? They could go either way. Obviously, on the upside, owning CNQ is a hedge against something dramatic happening in the Middle East that would impact oil supply. But I think it's more likely that a lot of this will tend to pass without any severe consequences of what's going on there. We'll see. You can never tell. Um, the bottom line is I still want to own CNQ, but I don't want to chase it here. Like I said, it hit an all-time high last Thursday. It's down 6% from that all-time high. It's continued to be a little soft this week just on oil prices being a little soft. But I want to own it because one of the dividend yield currently at 4%, their industry-leading margins on crude oil production, and they're leveraged an ultimate rebound in natural gas prices. Now, I don't see any near-term hope for a big rebound in natural gas prices, but ultimately, I think they do strengthen, and CNQ is the largest natural gas producer in Canada. So again, I'd rather buy it below 75. Alternatively, as you know, I like to write puts a lot. You can write $75 puts in June, just a little over 2 months, right now for $2.85 or 3.7% on the current stock price, which isn't bad if you want to be cute and play it safe. Um, I think there's technical support at 75, but there's very strong technical support at 70. I really don't think you get a shot at buying this stock down close to 70 in the next 2 months unless we just have a dramatic pullback in the overall market or in oil prices. So, you know,
Hmm.
I'm skeptical you get a chance to buy it close to 70. I'd rather buy it below 75. That's still a little tricky just given, you know, the geopolitical tensions and the rest of oil prices could run up from here. But sort of the safe way is to write the $75 puts or wait to see if we can buy it below 75 here. So I'm being patient, trying not to chase it here, but I do want to own the stock.